Pump the brakes, everybody. How's it going? Michael Silva here. You're watching the Daily Stock Market Brief, the show that I do Monday through Friday, 5 days a week. Sometimes I miss it. Sometimes I don't. I'm pretty on it for the most part. We use technical analysis to get a good idea as to where the stock market might be heading next. We also use intermarket analysis. Basically, today we got a lot to cover. Notice the thumbnail said pump the brakes. Well, there's a reason for that, and we're going to be explaining it when we go through the indices and the various stock indicators. Today, we're also going to be covering commodities, the dollar. Somebody mentioned Bitcoin, so I'll bring Bitcoin up too. Bonds, yields. Then we'll kind of wrap everything around with a final conclusion. Before we get started, I just want to say thanks to the sponsor. I got another sponsor today, so I'm pretty excited about that. So you are going to experience no mid-roll ads on my video. At the very end of the video, I'm going to talk more about Winston Gold Corp, a junior mining company. So stay tuned for that. So let's go ahead and get into today's show. All right, welcome back. First off, I want to start off with a sector rotation graph. This allows us to see what the spiders are doing. If you're like, what the heck's a spider? What's this guy talking about? Well, it's the sectors that make up the S&P 500. And I want to point out, what's leading the way right now, and we're looking at a 13-week. Why? Well, 13-week is really good for understanding short-term trends. And as you can see right now, leading the way is XLE. That is energy. And what have we been saying throughout all these market briefs? We've been saying that, hey, when we have bad days in energy, it seems like a good time to buy the dip. Today was a down day for energy. However, some individual stocks, some that I personally trade, like CPE, it was up significantly. So I sold some of my position. Very happy about that. So is energy sector XLE going to continue to perform? Can we find more setups? Obviously, we don't know if it's going to continue to perform to the upside. But if we look at the sector overall, look at this inverse head and shoulders forming. I haven't seen anybody chart this yet, maybe because I wasn't really paying attention or looking for it. But we're coming up into this big area of resistance at 44, inverse head and shoulders, right at the neckline. Hey, if we can start breaking out through this, that can give us resistance, then can become a very solid floor for support. We have the MACD crossing up right here. So if you want, this would be a good opportunity to start looking into individual stocks in the energy sector, or you can look what makes up the XLE, and you could look for certain setups that look similar to this, and that might be breaking out. So this to me looks very good. But like I said, we're coming to a time where you might want to pump the brakes. So yes, relatively speaking, when we look at a relative graph, which I don't have it with me, I should have did, it will probably perform better because we're currently leading. Not guaranteed, but it probably will, all right? So the reason why I'm bringing the pump the brakes up, we'll get into here on the S&P 500 when we look at the VIX and so forth. But relatively speaking, even if this were to fall from a relative performance, it probably might fall less than the overall market, or the S&P 500 is kind of where I'm saying. So let's get into the indices right now, starting with the S&P 500. Then we're going to work ourselves through it and then look at some stock market indicators. First off, why am I saying pump the brakes? Well, first off, we had a small range candle form, doji candle, small range. What does this entail? It means indecision. Okay, it goes up, it goes down, and it basically opens and closes exactly where it started. So we did tap another all-time high today. We didn't close at an all-time high, but we reached to an all-time high. Small range candle at the upper range of the channel. Price percent oscillator is bullish looking right now. RSI is not overbought or oversold. It's still above 50. Things are looking good. But why I say pump the brakes is because when you see a little small range candle like this, after a big move up, it means momentum could be potentially slowing down for a period of consolidation or a pullback and then a continuation. We're in overall bullish context here, people, so it's nothing to crazy trip out about. But just know where we came from, the 50-day moving average. We said we're going to look for more stock setups. We posted more and more. And now what I'm saying is, hey, pump the brakes. Make sure you're taking profits, because now, the party might slightly be put on pause, all right, or over. We don't know yet. On the 30-minute time frame, because we're going to look at daily and 30-minute time frames today, I wanted to show you just a 30-minute bull channel that this is in. You can see it ping-ponging back and forth, negative divergence, resistance at 391 on the SPY, but it's an overall bullish context. And if we start breaking down through the channel, you can potentially see the moving averages or these gaps that can also act as an area of support going into tomorrow, okay? All right, let's go to the Dow Jones on the daily time frame. Another small range candle. guess what? We broke out of that 31,250, and now we back tested it, and it's indecision. So are we going to consolidate sideways? Are we going to fill some gaps below us? Is this just a temporary move above, and now we're going to come back to the channel? It's too hard to tell, but this is why you just got to be careful now. Okay, we had a huge, nice run this last week and a half, and now we're coming into an area that could be a period of consolidation, which it could be a slow week, right? This week might be slow. It might progress forward, but can also turn around on us, okay? So that's why you need to really be cautious around in these levels. 30-minute time frame, you can see we ran into this wall of resistance at 314.50. This is the DIA, the ETF for the Dow Jones. And I think that we're going to find some support right around here at 312.50. All right, if we start breaking above 314, yeah, this run could continue pushing forward. Let's look at the NASDAQ. We're going to look at the Qs. All right, the Qs, up channel, a little bit of an inverted hammer candle right here. Okay, so we have some confusion. We have a hammer candle, then an inverted hammer candle. Well, this hammer candle is actually a hanging man, which could be bearish on a move like this. And then it could also be a bearish candle right here. So pump the brakes, right? We're at the upper range of the channel on the Qs, on the daily time frame. Maybe we're going to take a period to consolidate, or maybe pull back into the 20-period moving average. You can see the 20 period has been acting as support. I'm sure the 50 period can act as support too. Like I said, you just need to understand if you're going long at this specific area, you're buying long at the upper range of a channel with an inverted hammer, and disconnected from the 20-period moving average, very disconnected from the 200 and the 50, all right? 30-minute time frame, I just marked out a couple areas of resistance. 335 would be that all-time high up there. And then we have the lower range of this channel, 332. It clearly acted as resistance right here, came back tested as support. This area right here is a gap. I should have had a gray box. Actually, no, the gap was filled by this hammer candle. My bad. That's why I didn't have the gray box. And then we moved up, tested resistance, started heading a little bit lower. RSI is fine. The context of the chart is fine. You see the 50 period above the 200 period. Nice spread between the two. So this is the channel that I'd be kind of keeping an eye on going into tomorrow's trading day. Let's look at the Russell 2000. The IWM continues to just ramp and make all-time highs. Just insane bullish context, 20 over the 50 over the 200. Nice spread between all the moving averages. But just look at all these gaps constantly pushing the market higher and higher. You need to be careful here. Obviously, this is still, no matter how high this goes, if it doesn't take a breath, I will not go long. That's just as simple as it is. On big gap ups, I might actually short or hedge short into it because a huge gap up might result in a pullback intraday, which could be a good play. Price percent oscillator is good. It's healthy. It's pointing up. Still leaves room for consolidation or a higher move. All right. So there's that on the daily time frame. On the 30-minute time frame, nice bull channel. We ran into this kind of area of resistance right here at about 230, but we're going to call it 229 because more of the closing candles are right above that. And then we have the lower range and then also this area of support. It was resistance, then we broke above it, and now it can act potentially as an area of support, which is right around 226. Now let's get into some stock market indicators to kind of help you see the bigger picture, see what I am seeing right here. So we're running into areas of resistance as far as those channels that we're talking about, right? So pump the brakes, but then also take a look at the VIX. All right, where are we? We tapped that pink box. That pink box was a target. So one thing can happen for stocks to continue to go higher, like in the S&P 500. You'd want to see this still move lower. All right. You'd want to see the VIX go lower. Obviously, we're right here when we marked it off and it fell through the roof, and we had a great run. We made some huge profits on some of these stocks. Now we're coming to an area of support, all right? So, yeah, we broke through this little trend line right here, which, it has to be noted. But now we're coming into this area of support and this previous gap down here. All right, so this is why I'm saying, okay, pump the brakes, because if we start moving higher here, or if we maybe just start trending sideways, it could be a pretty unproductive week in various stocks. So you need to be very particular with the stocks that you trade, and also be quick to take profits in times like these. So yes, if we continue to drift lower, 19, 20, 18, or even fill this gap, that would be great for our current positions, etc. However, just know that there's support here. And if you run into support with the VIX and it bounces from that area, it can put pressure on your positions. Overall sentiment, we're looking at the CPC put to call ratio, still really bullish, haven't crossed above the sell signal. The sell signal was when the 10-period moving average crosses above the 0.8, but you can see the light purple shaded line continues to head down lower, which means it's going to drag this down lower until it starts moving up. So we'll keep an eye on that one. Now let's look at some BP charts. The BP charts are the bullish percent index. Basically what it's saying here is 67% of the stocks in the S&P 500, because that's the one we're looking at, are on quote-unquote buy signals based on point and figure charts. When it reached this overbought, oversold area, we said, okay, now we can potentially see a bounce or see a move higher. Guess what? We're seeing the move higher. We're still not overextended. I like to look at the BP charts on the RSI for overextended moves. Okay, it gives me just more confirmation or more ideals in my favor when I'm trying to create positions. So we're above 50. It's bullish. It's fine. Nothing to mark out there. Same thing goes with the BP NDX. 69% of the stocks are on buy signals. We were oversold. Now we're bouncing up. We're above 50. BP INDU, we're actually moving up into the oversold territory. So keep that in mind. We're not there yet, but we're closer here than the other BP charts. Then we got the Pring bottom fisher. This is good for finding bottoms. You can see here, when it crosses below the black line or even the green line, it can mark out a good indicator to see, maybe we reached a bottom. It's not always completely accurate, but you can see here, the signal line crossed above the 10-period moving average right here at the March crash, and then boom, we, actually pulled back a little bit, but then continue to ramp higher. Same right here. It would pull back here, so it was a little late to the party, but then clearly we moved up higher. Right here, it dipped, and then it didn't signal the bottom until a little bit after. We moved up higher a little bit, then fell down. So it's not completely accurate, but it is pretty good for finding market bottoms. Now, the difference between, this down here, and then, for example, this one, or sorry, the current one right here where we're at, where it looks like we're about to start crossing over, is that we're at an all-time high. We're at, not an all-time low, but we're at a very low point here, and now we're at an all-time high when this crosses. All right, so we don't know for certain, but I do want to call out the fact that, hey, this looks like it's going to cross over. So what does that mean? Maybe we can get some consolidation and then continue to move higher. Like notice a couple of times where we moved lower, right here, we moved lower, consolidated, but then continued that move higher. And overall, the NDX is in bullish context, and we've already kind of showed that on previous charts, and the SPX, sorry, too. Here's the night high low. Clearly, when we get these overextended readings on this chart, we can get some pretty big pullbacks. We've seen that here with the blue arrows, but we've been just jammed up at a very high level, and then we pulled down a little bit, but guess what? We're reaching all-time highs here in the NYSE, and we're just still hovering above this kind of overextended area. So things are still jammed up, in my opinion. We will see what happens here in the near future with that. As far as the breadth of the market, this is good to look at breadth of the market. We're looking right now at the percent of stocks above the 200-period moving average, and that make up the S&P 500. So 90% of the stocks are above the 200-period moving average. That's overextended levels. It's been this way for quite some time, and we've been just jamming higher and higher. But know when we get these readings, you can see some pretty big pullbacks that I marked out. So 8%, 6%, 20% down, 16%, 7%, 5%, 5.5%, and then 9% too. So yes, we're still floating above 90%. Eventually we're going to have to take a breath here. But right now, as it stands, we have not taken any breaths at all. We've just been relentlessly ramping higher, which is good for long positions. Here's the percent of stocks above the 200-day moving average in the NASDAQ. And you can see here, we've been just jammed up above this overextension. We're at 91% of the stocks right now above the 200-period moving average. Here on the NASDAQ, you can see this, it was also jammed up. Where was that at? Well, that was right before the February crash. And now, very similar, we're seeing it just jammed up even higher levels. So, does this mean that the same thing's going to happen? Nope, that's not what it means. But just understand the dynamic here. We had a relentless tear up higher. We had a pullback, and we moved up even higher. We having this relentless tear. We had this pullback, and now we're relentlessly ramping up even higher here too. So, it's something to take note of. It's something to pump the brakes on. It could be construed. Is that the right word? I don't know. I do that often. As bullish, but from a contrarian standpoint, and you got to be very aware of the contrarian standpoint too, it could be considered overextended. All right, Robert Kiyosaki always says a coin has three sides: heads, tails, and the edge. And to be a very good investor or trader, you can't just say I'm bullish or I'm bearish, heads or tails. You need to be on the edge, and you need to understand both the bullish perspective and the bearish perspective. Because if you do that and you're sitting on the edge, you're the wolf. Yeah. Commodities, let's get into it. Gold, I just wanted to call out on this full stochastic, bullish divergence. Lower low here on gold, bullish divergence here, still trending lower. And we had this, inverted hammer shooting star type candle into this area of resistance. And the area of resistance is also by the 200 period moving average and the 50 period that's crossing beneath it. Did it cross beneath it yet? It has not. It's at, so the 50 period is at 156 or 1856, and the 200 is at 1855. So still not a death cross, but it looks like it will go there if we can't, resolve this. So this could simply be just a back test right here and then potentially head lower, which would be bad for gold. It would be bad for miners and various other just assets that can be affected or correlated with gold. It would be bad for, let me think here. It'd be good for probably, no, let's continue. Silver. Let's go to silver, descending triangle, but we broke out. It's in much better bullish context than gold. You have the 50 period sloping up. You have the 200 sloping up. You're back above the 38.2 fib level measured from down here to up here. So that's a good sign, but this could very well just be a dead cat bounce. This daily candle, another indecision candle, right? And this one has a long upper wick. So this could be, I think it's called a gravestone doji candle. It needs some more confirmation, but we are right here at an area of resistance, and we're just slightly above this area of resistance, which would make it technically support. But we're coming from a very extended move to the downside. Then we rubber band back, and then potentially we break down through the 50% retracement level and head lower. It's possible, but also it's kind of sneaky right here because silver is, a low here, a higher low. If this trend continues, we're kind of seeing some stealth moves in the silver market. Then we got Bitcoin. You probably heard of the news about Elon Musk and Tesla, buying 1.5 billion or something like that. I don't know. I'm not going to get into that. I'm just going to look at the technicals here. Clearly busted out of this symmetrical triangle or descending triangle, whatever you want to call it, and then plowed even higher to all-time highs. Even today, it reached over 48,209. Now, we're seeing a little bit of indecision right here, a little bit lower range. This could mean that we might come back test 42,000, right? This was resistance. Then we broke through the resistance. We might come back to test it as support and then continue this relentless ramp higher. That would be my next guess. But keep in mind, we've seen these breakouts before never get back tested, right? Like this breakout right here, pow, never got back tested. It's normal to see back tests, but on really strong breakouts, you typically don't see back tests. And this one right here was clearly a strong breakout. We'll see if this one's a strong breakout and doesn't even get a back test, continues to move higher, or consolidates, creates a bull flag. Here's another one that I want to point out. I just want to point out lumber. This is a monthly time frame. We usually go over the lumber to gold ratio, stuff like that, but I went over it yesterday, hasn't changed at all. So I just want to just call out how, just ridiculous this move is since 2020, basically since the new QE Infinity program. So to say that inflation, things aren't getting inflated, is just crazy to me because you look at the CRB index, you look at various foods like, commodities like soybeans, corn, wheat. There's a whole array of things that are just moving straight to the sky, not to mention other assets and various companies too, straight to the sky. It's just absolutely insane. So how long could this move last? I don't know, but got a negative divergence here on the monthly time frame. And on top of all of that, when we get overextended by the upper monthly Bollinger Band, you can see it here, boom to the downside, right here, boom to the downside, here, boom, now right here, boom to the downside. Now we're not, like the entire monthly candle is above the monthly Bollinger Band. So the monthly Bollinger Band, the upper portion right here is at 868. The low of this month's candle is at 842, right? So, and where we closed today is at 947. So we're closed above that monthly upper Bollinger Band completely. That whole body there, the lower wick did tag into it, but just absolute insanity for the price of lumber. Now let's get into dollar. what do you know? The dollar has not back tested 92 and kerplunk down back to the 20 period moving average. Is this going to hold, or are we going to just continue to see this roll over and then start breaking down below 89.50? That'd be pretty crazy to see. We'll see. Maybe we're forming, you know, just a little channel. Maybe we're going to come down a little bit, bounce back and forth, and then continue, you know, some sideways movement. I will say the MACD is crossing, looks like it's about to cross over, bearish crossover. RSI is back below 52 as well. Pretty aggressive down day overall for the dollar. Opened up and pretty much headed straight down. Let's look at bonds and yields. Nothing too crazy happened with yields today, just some sideways action. But what I do want to call out is just the amount of volume that came in for the TLH, 10 to 20 year. We're at the lower range of the channel. You see we gapped up, headed lower. A crazy amount of volume, you know, just a big spike up in volume. The last time that happened was actually at the upper range of the channel, big red day. We moved down further. Prior to that, we had this big day of volume, not nearly as big as these, but that was right up here, and we also moved down. So is this signaling more selling here and higher yields? Potentially, but, you know, it might also mean that we're just getting more volume coming in, and we might see a bounce from this level. So we'll keep an eye on it. We have the bullish divergence here in the RSI too as well. Now, for a conclusion, just to wrap up kind of my thoughts of where we stand, this is, you know, my personal opinion is this is where you want to kind of pump the brakes a little bit to see what takes place with the VIX and what happens with this upper range of the channels that we're reaching in on the indices. Various stock market indicators suggest that we can still move higher, but also we need to be just cognizant of the price action of where we currently stand and how the candle ranges are kind of coming. So I got rid of a lot of my positions today, emptied out quite a bit of them. If you don't follow me on Twitter, you can follow me there, and I post more frequently, more charts. Today I posted one, ticker symbol AQUA. That is one that I actually entered into at the bottom range of a channel. But if I'm correct about, you know, pumping the brakes here, I'll probably get stopped out of that position most likely. So, you know, just be very careful overall in this current environment until we see some consolidation, or if we get a little bit of a pullback, then we can start looking for more setups. That's my personal plan. I'm not recommending you to do that, but that is, like I said, just my personal plan. Now it's time to get into today's sponsor. But before I do, I just want to say thanks again. This helps support my channel. Maybe one day I can do this full time. You never know. And then I can provide even more content to all the viewers for absolutely free. It's a great thing. And on top of that, I remove mid-rolls every time I get a sponsor. So it's like a win-win for everybody here. Okay? The sponsor, we get to, you know, build awareness around their companies. And then 2, you get to see new companies that you may have not heard of. And then on top of all of that, you can also view my entire videos that are unbiased, that I look at both bearish and bullish perspectives with no mid-roll ads. It's a beautiful thing. Today's sponsor is Winston Gold Corp. Ticker symbol WGC on the Canadian Stock Exchange, and in the OTC market, WGMCF. Winston Gold Corp is a junior mining company focused on generating cash flow by advancing high-grade, low-cost mining opportunities into production. This here is Joseph Caraba, the executive chairman. I believe that I am pronouncing his name correctly. Joseph Caraba. He is actually the former head of Newmont's acquisition team. And if you don't know who Newmont Mining is, I mean, come on. Let's be real here. Newmont's one of the largest, if not the largest, next to Barrick, mining companies. And he quit his $400,000 a year job. I want a $400,000 a year job with Newmont to come run this company, Winston Gold Corp. Not only does Joseph have a lot of experience and has a great background, he also has a management team with extensive experience as well. I wanted to pull up a chart of WGMCF, Winston Gold Corp, just to kind of see how this has been trading. Now this is on the weekly time frame. I'm using not a log scale right here. And the reason why is this big hammer candle right here really kind of distorted the look on the log scale. And what I wanted to call out really is just been actually an incredible amount of volume accumulating in this area. So it is quite an interesting, kind of an interesting setup. And this potentially could be from recent news that has been coming out. You can see this last week, we're starting to see some big volume spikes come in. But in recent news by Mr. Murray Nye, and he reported that Winston Gold produces first gold and silver concentrate and ramps up underground mining. One of the quotes in here is bearing and unforeseen issues. He believes that the company will be mining and milling high-grade gold and silver from the cluster in parallel veins at a rate of 150 TPD by May 2021. If that's the case, there could be a lot of opportunity within this company at the early stages. Now, there's a lot of risk involved with junior mining companies, that is for sure. Just so you know, I'm not personally invested in this company. I will be keeping an eye on them, though. I do have exposure to some junior miners, but I typically, when it comes to more speculation, I usually keep a smaller amount into speculation, around 2 to 5% of my overall portfolio. And I believe that silver miners, gold miners, they have an outstanding value coming into a commodity bull run, which I believe that we are in the early stages of. I'm going to have links to the website, Winston Gold Corp website. I'm going to have links to their presentation deck all in the description below, and their ticker symbols if you want to do research yourself, learn about them. They also have project information, which is always important. You can click view the project. Just some highlights here. Let's go ahead and get into that. This is the Winston District Gold Project. It's situated 18 miles southeast of the capital of Helena and approximately 2 miles southwest of the small community of Winston. You can see here where it's located in Montana with the maps, and then it has more zoomed in so you can see more about the project and even past production. And then we also go into what their opportunity is moving forward. Now, what I also find interesting is that starting in mid-February, the company's mill will run 6 days a week, 3 shifts a day, 24 hours for a total of 26 days a month, processing 90 to 120 tons per day of gold and silver bearing materials produced in the company's mine. Using these published rates of milling, we can hypothetically calculate what an average month would look like going forward. On a monthly basis, this equates to between 2,500 and 3,100 tons of material, judging by previously announced drilling results. Management estimates that grade of material is 0.25 to 0.3 ounces per ton of gold, which means that the company would be mining 575 ounces of gold with a recovery rate of 92% on the low end. If you go to their website and look at their presentation deck, you can learn more about the company, including their mission and what their focuses are, their vision. I want to quickly go over that because this stuff is very important when it comes to the future of individual mining companies. So their expert team has acquired an exciting high-grade gold project and plans to advance these assets into low-cost, profitable mining operations. Now, if you go to the end of that presentation deck, you'll come to a page that says an uncommon goal, and you'll see here in quotes, it's a gold company focused on cash flow. Well, that's extremely important to shareholders and to the business's success, is by having a company that really does focus on cash flow. So it says an uncommon goal here to quickly expand and advance our high-grade gold assets into production, spend capital wisely, acquire other high-grade projects, surpassing, obviously, that current project, the Winston project in Helena, Montana, as of now. So as I previously stated, looking at the overall chart and the volume accumulation, this does look actually quite appealing to me. We have been putting in higher lows. This one lower wick here that kind of got overextended to the downside, I'm a little curious to know what that was. This could have been right around, obviously, that crash that we had that affected stocks across the board. And you could see these long cupping kind of patterns that have been taking place, but kind of building up higher. This could represent a potential inverse head and shoulder. I think that the mining companies moving forward, obviously there's a lot of risk within junior miners and any risk asset, but the opportunity there is very vast. And why I think that is simply because there's always going to be a need for silver and for gold. They have industrial value. They're also precious metals. It makes a lot of sense to me. If we can start breaking above this previous resistance, that could be the early start for a potential larger move moving forward. Another way you can look at this chart here is this could be potentially a cup and handle. We saw a lot of volume come in here and then dip off and then come back, and now we're forming this lower handle right here. So a break above this resistance could represent something very nice. nice. And you could see just in the last week, it's up 27.83%. So overall, we have some good news coming out. We have a good executive team. You know, I don't personally know too much. I don't have my own money invested as of right now in this company, but I will be keeping an eye on this specific chart. I want to once again thank the sponsors of this video for allowing me to kind of just bring more awareness to the company and then also compensating me for doing so. It's greatly appreciated. And once again, I do appreciate that support. Hope everyone has a wonderful day, and I will see you back on the next Daily Stock Market Brief.